markets in a minute. Our weekly recap of what's happened in markets over the past week. Markets paused after a strong run, with the S&P 500 posting its 7th straight weekly gain, albeit a modest 0.2%, while the Nasdaq Composite and Dow Jones Industrial Average both ended slightly lower, with late week volatility creeping in. Bond markets took center stage, though, with Treasury yields surging as investors reassessed inflation rate expectations, with the 10-year Treasury yield climbing to 4.959%, while the 30-year rose to above 5.1%, the highest level since 2007, signaling that markets are increasingly pricing in that higher for longer interest rate environment. Interest rates expectations have flipped, with future markets now pricing in that roughly 50% chance that the Federal Reserve could increase interest rates before the end of the year, compared to virtually no chance of a rate cut. Corporate earnings remain as a bright spot, with the S&P 500 companies on track for that 11.4% revenue growth and 27.7% earnings growth, the strongest profit expansion since 2021, highlighting that company fundamentals remain resilient despite macroeconomic pressures. Leadership at the Fed has also changed, with Kevin Walsh now confirmed as the chair, replacing Jerome Powell after 8 years in the job. Markets now watching very closely for any policy shifts in June's meeting. The US dollar strengthened sharply, posting its strongest weekly gain in 2 months, as rising bond yields and that tighter monetary policy expansion attract global capital back into the greenback.